Hello, everyone. This is Matthew Frailey with BreakpointTrades.com, bringing you advanced technical analysis, market commentary, trade ideas, and mechanical systems since 2003. Okay, so let's go ahead and get right to it. This newsletter is on Sunday evening, Halloween, so happy Halloween, everyone. I'm recording this newsletter on Sunday evening about 8 p.m., much later than I had planned to. I meant to try to get this out early on Sunday, but too many things going on with kids and parades today, being Halloween. You know how that is. So again, we'll review the markets. Here you can see via the table of contents what this newsletter is divided into. These weekend type newsletters tend to be quite comprehensive. So we'll probably be discussing charts here for a good 40 minutes or so. We're going to cover everything pretty much in depth from the general market indexes. We'll cover all those in a top-down fashion. Look at the monthly, weekly, daily, and intraday time frames. We'll also review some market indicators, some of the KISS charts, system charts. We'll look at bonds. We'll also do an in-depth dive of commodities. Take a look at quite a few of those. Currencies, US dollar, cryptocurrencies like Bitcoin, also precious metals, gold, silver, the miners, GDX, GDXJ, and a few individual names. And I'm going to follow up with some recent trade ideas that we've had. We've had some good winners. All right. You can see the table here, the DVTs. We had quite a few new DVTs last week showing up. Again, if you happen to be new to Breakpoint Trades, think of the DVTs as sort of like trailing stop suggestions or guides for the indexes. Again, I'll show you some charts when we get to those below. But as far as the market, guys, nothing really standing out, quite honestly. We're continuing to be in this uptrend. Markets tend to do well during earnings season, and that's been the case, though it's not been the case for all the FANG stocks like Facebook and Amazon last week. But otherwise, the market continues just probing higher. So we'll take a look at some things there. We're maybe a little bit overbought short term, but really nothing major standing out. One thing I would keep an eye on is bonds, especially the high yield corporate. They've been weakening. There's some divergences there. And also the US dollar, quite strong. So if that continues to rally up, we'll see what effect that has on precious metals. What I'm going to be watching for precious metals is if they can form a higher low in this pullback or not. Or are they just going to crater back down? We'll see. So let's go ahead and get started with everything. So first item here shows the index sector table, what transpired, say, on last week on Friday and for the week. So you can see the major indexes for the week had solid gains. The Russell only had a paltry 0.3%. The Dow was only at 0.4%. But everything else strong, especially the tech area. NASDAQ 100 up 3.25%. NASDAQ up 2.7%. And the S&P, which is our proxy, up about 1.3%. For the major market sectors here, that gives you a nice broad overview of the market. We followed 21 sectors. Now, one interesting thing here is that, I'd say about 50% were up and down. So despite all the major indexes being up, not all the sectors were up. So it wasn't a huge, let's call it broad-based rally for the week, right? What we've seen is a lot of the big cap tech stocks been leading the market as typical instead of the smaller type stocks and the value stocks, right? So if you look here, losses, particularly in the energy area, oil services down 5% for the week. Again, energy area had a big run. It was diverging. So we're finally seeing some pullback there, not surprising. Banks, pretty good pullback there, down 2.8%. Financials also down. Brokers, transports still closed up for the week. Let's see, metals and mining down 2%, drugs up 2%. US dollar up 0.5%. That's a pretty dang big gain. Moving on to cryptocurrencies. Kind of a mixed bag here. They've had big recent moves. They bounced it a little bit late in the week, but you can see what's been going on over the weekend here anyway. A lot of the crypto stocks like GBTC, Mara, had nice rallies late last week. Commodities here. General DBC was down. Crude oil just slightly down. So some of the energy area Copper down 2.9%. That's fallen pretty good. Now we'll see if it can find some support. There is a support zone that it's approaching. The ags all posted good gains. Corn up 5.6%. Precious metals closed down. And in the stocks, which I expected, the stocks especially have had a pretty good rally off the lows. We had some nice trade ideas. Now I'm going to watch to see if these can form a higher low, but I need to see a trigger. Okay, I'm not just going to buy a higher low pullback. We need to see a trigger. And at the very bottom, bonds. TLT is the big one that's standing out to me. Big move up. Remember, moves opposite of rates. So as this goes up, long-term rates go down. So we've had quite a bit of slowdown in the economy. You know, just look at the GDP, guys. GDP, they revised it down to only like 2%. And wouldn't be surprised they revised it down again. So I think the bond market's thinking that the Fed's not going to be a taper like they said. And that's also negatively affected some of these financials and banks. Moving on, let's go ahead and look at the charts. So we'll first start off with the monthly charts. So here's a monthly view of the major indexes. Here's the Dow at the top, the S&P. So, you know, we had the nice down month in September, which we were expecting. That's typical seasonality. And lo and behold, we recovered that 100% on all these indexes. All right. There's the Russell at the very bottom. You know, as you know, it's been going sideways for 7 months. Eventually, it's going to break out of this range, but nice recovery following September's typical weakness seasonality. Here's a weekly view of the major indexes. Again, so far we've been up 4 weeks in a row now. The major indexes held these support areas. The Dow at the top bounced off the lower Bollinger Bands. S&P off this trend line that we were showing. NASDAQ off this trend line. Testing the upper Bollinger Bands on these. So a little overbought in the short term, but trending up nicely. The Russell is definitely one to watch. We've been going sideways here for over 8 months. So energy is really built up during this consolidation. Here's the daily indexes. So as you know, we've formed these bottoms in late September. We've had a nice rally up. So far, the major indexes have been holding the 9 EMA. That's your short-term support. Okay. Again, guys, we're just simply uptrending. You can see the NASDAQ area. That was lagging a bit, but finally, NASDAQ and NASDAQ 100 finally took out their September highs last week. The S&P and Dow had already done so. The Russell is still stuck in this big sideways range. Let's go ahead and move on to the S&P. We'll start with the S&P on the large time frames and work down. So here's the monthly view of the S&P. So as you know, we were up 7 months in a row. We talked about that coming into September. We were expecting some correction, and we did get that in September. Nice old down candle. Now at the time, what we didn't know is if we'd probe a little lower, maybe tag the 9-month EMA here. Remember, you know, just from pure reversion to mean, the 9 EMA is tested over time. You get so far stretched from it, come back to it. But we did not. Probe just slightly lower and, you know, totally recovered that loss from September. Made new all-time highs once again. We also talked about if we retraced more than 50% of this down candle, then odds favored a move back to new highs. So that's a very simple guide, something we've discussed in our tutorials before. And I'm going to do a follow-up on that, guys. But if you happen to be new, whenever you have a solid candle like this without really any good, you know, big tail wicks, and this would also qualify for one as well. A good rule of thumb is if you take back 50% of that candle, that's an important thing. So for example, let me draw this in. You know, down here, for example. So, you know, once you had this is back here in early 2020 after that big sell-off. So once you had this large up candle, mostly a solid candle, if you went long here, price should not have retraced more than 50% of this candle. So if you went long in this candle, you could have put a stop approximately 50% of this candle range. Okay. And same thing here. Taking back more than 50% of this candle was bullish. Again, I'll get into that more at another time. So let's go ahead and move on to the next charts. Here's another monthly view of the indexes of the S&P. So this is a very, very simple guide. I'm not a big fan of moving average crosses, but this has been a pretty good guide longer term. This is a monthly chart of the S&P. Okay, this goes back to the early 2000s, and you could take this back, 50 years if you want to, guys. But I'm just showing this time frame. So what we have on here is two exponential moving averages, the 8 and 13. Those are both Fibonacci numbers, as you know. Here, this one's getting cut off a bit. I should add a little more time, but it's been a pretty good. These have been a very good guide for, just catching the longer term trends on these cyclical and secular bull markets. So, catching that cyclical bull market 2003 to 2000, late 2007. You could see it cross to the downside in 2008 here. Again, these are never going to catch highs or lows, especially lows, but kept you out of that 2008 low. Usually it's best to get back long earlier based on some other trigger. But since, say, late 2009, these two moving averages have never crossed. Okay, they've gotten close, like right here, but they've never crossed. So they've basically kept you in, for the last 11, 12 years. I will say, right now in the short term, they are a bit wide. That's why I have them circled. When they get too wide, a lot of times you're due for some reversion to mean. But so far, we've yet to get any reversion to mean. Maybe we'll see if we get some, perhaps early next year. Moving on, here's the weekly view of the S&P. Again, not much to say here. Made a new all-time high. We had that typical weakness into September. About a 270-point pullback. We didn't break long-term symmetry. These are your long-term symmetries. By the way, I'm going to do a video on symmetries as well. It's a very useful guide for your trading toolbox. But anyway, again, no changes here, guys. Maybe new high. You're moving average ribbons. Stayed bullishly stacked. You can see it pinched here on that pullback. Usually a buying opportunity. One thing to point out, though. So while we did have some magnitude divergence up here coming into September, we had a pullback. Price is now strongly lagging, as you can see. Strongly lagging. So MACD is not anywhere close to crossing, and we're at new highs. So it's possible we set up another divergence, late this year that leads to a bigger pullback, say early next year. So that's something to be mindful of. Okay, but short term shouldn't have any bearing on your trading. Next. Moving on to this chart. This is a weekly chart of the S&P. This is one of our KISS charts. Keep it simple, basically. But what the DVTs are here, this is like a trend following type system. The DVTs, think of them as higher lows. What it means is the Ackerman dynamic variable trigger stop, essentially. But this has been a pretty good guide. The DVTs would have got you out of the market, say back in early or late February, actually, 2020. So it would have kept you out of that 35% correction you had at that time. Again, best to have went long on something else. And then once the market's trending up, DVTs trailing stops kicked in. And these have not been hit the whole time. So they've done a very good job about keeping in this uptrend, though. It's obviously been a very strong uptrend on a weekly chart. So no changes. We did get a new DVT last week at 42.70. Should we probe a little higher, we should get another DVT. I think we have 23 consecutive higher lows now. So good job with this so far. This is also a good guide, the moving average ribbon with our custom BPTMA Deluxe. That's our custom moving average. These moving averages here are standard EMAs, but another thing useful is when the BPTMA, when it turns red, that's when the slope goes red, and they're bullishly stacked, you look for buying opportunities in these areas. Just like we had it going red here, where we had a pullback into September, you look for that as a buying opportunity, okay? Moving on to the S&P lower time frame. So here's the daily. Again, we had a simple ABC correction in September. Corrections, guys, tend to be zigzags, ABCs, or coils. And this was the simple ABC. And, at the time, we weren't sure if we were going to form maybe another lower high, work our way eventually to the 200-day moving average, since it wasn't that far, but it wasn't meant to be. Once we formed this higher low here, we had sort of an inverse head and shoulder pattern right here. You can kind of see it right here, left shoulder, head, right shoulder. Again, I'll show that on a lower time frame, but we identified that in real time. And that obviously played out. But once you started getting here, it was pretty obvious we weren't going to go down to here. And this has been a pretty good rally up. Took out those highs and made a new high last week. You can see how the ribbons flipped back, bullishly stacked back here in early October, and they've been expanding now. One thing I will say in the short term, we do have a little RSI divergence on the 5 RSI. I thought I had that drawn in, but I don't. But you can see it here. Again, that could be negated if we continue pushing, but for now, we do have that divergence potential. Move on to the next chart. So here's a 2-hour chart of SPY. That's the S&P 500 ETF. So if you go back and look at my newsletters from early October, once we put in this low here, rallied up, pulled back, started curling. In my newsletter, I put out that it looked like an inverse head and shoulder setting up. Again, it wasn't a perfect inverse head and shoulder pattern. I usually like it when you don't have such a sloping trend line, but it was otherwise you had a nice higher low potential here. And this ended up playing out beautifully. Price gapped here, had a power gap, broke through it here, and we've been a very strong uptrend. Moving average ribbon's been a good guide, getting a little bit expanded, but again, so far, no real pullbacks. We are diverging a little bit on the MACD, but so far, price continues. Again, a good area for a really tight stop would be this higher low right here if you wanted one. Again, that's if you're on a low time frame. If you're trading the weekly charts, your 401k, or the dailies, that'd be too tight. Again, it depends on what your strategy is, what your time frame is. Moving on, here's a 2-hour view, a 60-minute view of the S&P. And this one has, by the way, 2 moving average ribbons. This uses the 9, 20, 34, 50 EMAs. This one uses a little faster set, 5, 10, 15, 20. Again, you can see the same inverse head and shoulder pattern that was there. Continue to work higher. By the way, we had a 47-point, roughly a 50-point pullback here early last week, and we've recovered. That's a good area to watch from a symmetry perspective. Okay, that's also a good area for a short-term stop. The MACD here, we had a divergence, negative divergence here, right at this high, and we'd pull back the 50 points. Okay, so far the MACD is still above 0. Keep an eye on it. Here's another technical thing, guys, and this is a useful technical trick. This is what I call stochastic momentum. So whenever I like to use, notice on my stochastics, I always have 2 of them, a 60 length and a 10 length. So 2 different lengths. The traditional stochastic is a 10 or a 14. So this is roughly, say, 4 to 6 times longer than the average stochastic. But whenever it's trending above 80, that means you're in a strong momentum uptrend. And whenever you have a nice pullback, if the faster stochastic gets oversold, while the slow 60 stochastic remains above 80, that's what I call a stochastic momentum long trade. You could buy that. Okay, so basically you could went long right here, had a nice 50, 55 point rally off that low. So that's a really good reversion to mean trade long setup. Okay. Again, short term, we do have some divergence here forming. Take note. Next, here's a 15-minute view of the S&P. A couple weeks ago, I pointed out all these open gaps. Again, I don't think these open gaps are going to be filled anytime soon. But on the next time we have a major correction, these will eventually be magnets. Those gaps are eventually filled. We had one here early last week that was filled on that 50-point pullback there. So far, continue trending upward. Again, this is a 15-minute chart. Next, here's the Dow. We'll come back to the Dow chart, guys. One of the charts didn't show up here, so let me pull it up manually. So here's the daily view of the S&P with our KISS system. Okay. Remember, I showed you the weekly chart with the KISS. So here's the daily. So the daily, again, depends on what time frames you trade. The daily KISS would have been hit back here in September. DVT at 43, say approximately 70. Market probed lower, not that much lower. And the system did quickly right itself, went back long here in early October. Then start with a new DVT, basically a stop right at the lows. So that's kind of the way the system works. It trails its stop up, gets stopped out. If it goes back long, it puts a stop at that low initially and moves it up as time goes on. Well, we got a new DVT last week at 44.50. So now we've had 4 DVTs since the lows. And here's the various cycle time frames. I like to look at these, see whatever's standing out. Here's the daily time frame. One thing to note in the very short term, the BPTMA is very wide with the ribbon. We had a little DeMark 9, so we are getting a little stretched here just short term. Now I will say futures are up a little bit tonight. So again, like I said, just that alone isn't a sell signal. We're clearly uptrending, guys. So, you know, nothing really new here. Just a little bit stretched, but again, just being a little stretched is not a sell signal on its own. Here in this 2-hour time frame, the ATR is a pretty good guide. I use a simple 14.3 ATR. So let's move back to the charts. Here's the Dow. Dow made a new high last week, bounced off its 90 MA. We don't discuss the Dow that often, 30 stocks only. So again, it's trending up with the other indexes. Moving on to the Qs, they finally made a new high last week. Most of the FANG stocks reported. Here's the weekly KISS system for the triple Qs, just like on the S&P. They've been trending up nicely since early 2020. None of the DVTs have been hit. We didn't get a new DVT last week, but should we probe a little higher, I think we'll get a new DVT showing up here pretty soon. See, the moving average ribbon's been a good guide. Also, guys, remember the 60 stochastic? I also use that in this time frame. Notice how it's been holding. Every pullback so far has been holding that 80%. So we've been in this stochastic momentum uptrend since October last year, quite honestly. Here's the daily KISS. We did get a new DVT last week on the Qs. If we probe a little higher, we may get a 4th one, just like we have on the S&P. The daily went back long the same day as the S&P did. As far as the cycles, pretty much the same thing as the S&P is showing. All right. Here's the daily S&P daily triple Q chart. Standard chart. New high here. Not surprising. Now, unlike the S&P, we don't have a divergence on the RSI. We do have a little bit of divergence on this CCI indicator. Here's the 60-minute chart. Just continue to uptrend. Notice the dotted lines here. Those are the higher lows I like to point out. Again, guys, if you want a simple guide also for a trailing type stop, use the higher lows. This is a 60-minute time frame. Again, it's relevant to the time frame you're using. You could use this method on a daily, a weekly, a 5-minute chart. But that's your last higher low on this time frame. Moving on to the IWM small caps, weekly view, up about 0.3% for the week. Again, they've been going sideways here for 8 months. A lot of energy is building. Here's the moving average ribbons. Again, very simple guide. Moving average ribbons. They get too wide like they were back here on that March 2020 sell-off. They're due for a reversion to mean back. It's like back here in 2018. They got too wide here on this expansion, and now we've spent 8 months going sideways. That has allowed them to at least come together, pinch a little bit. Energy is building here now. Here's the daily chart. Again, you can see this range we're stuck in. A couple weeks ago, we broke out of this little coil inside the channel. Just still chopping around here. That does it for the indexes, guys. Looking at some indicators, here's the VIX. So the VIX did rally a bit off the lower. It didn't hit the lower Bollinger Bands. That was basically impossible since the lower Bollinger Bands have been moving lower. But I was looking for a move up in the VIX to cause the lower Bollinger Bands to eventually maybe flatten out. And I think we'll start to see that now. You can see the VIX stalled at the middle Bollinger Bands last week. So we had the move up in the VIX last week while the S&P moved up caused some uncorrelation in the VIX to S&P indicator. Remember, the VIX tends to be highly correlated, well, with the market, inversely correlated. So whenever that moves together and you get this uncorrelation, you got to be concerned because once in a while, you notice how these spikes on the correlation indicator sometimes precede little market pullbacks. So be aware of that. We do have this uncorrelation showing up. Looking at some other indicators, here's the NASDAQ Summation Index, plotted as a histogram. We did have this, as you know, back in July. We had a huge, what this was showing is negative breadth in the market. This went negative back in July, but the market continued rallying up for a good month and a half. Price finally caught up with it, but then we formed a reverse divergence back here. Reverse divergence, that was a positive, and we've moved higher. Still hasn't went back positive. We'll keep an eye on that, but it's getting close. And here's something that is definitely something to be aware of. The S&P versus the high yield corporate. The two tend to move highly correlated with each other. This is a weekly chart. I mean, look at these. S&P 500 up here, high yield corporate here. They move lockstep with each other, but clearly they are not moving lockstep right now. Now, is that okay because the Fed eventually wants to tighten? Bond traders are selling their high yield corporate, which has been an easy trade, or will this result in the pullback in the market eventually? Something to be aware of. Here's the daily view. Again, you can see the clear divergence here. The S&P making new all-time highs, but high yield corporate not. That is a big divergence. Next, here's the triple Qs to the triple Qs equal weighted. Remember the triple Qs, you got a handful of stocks like the FANG stocks and Apples, etc., that represent the majority of the moves of the index. The equal weighted puts every component equally weighted. So Apple isn't worth 8% of the triple Qs, for example, in that. Anyway, there is a little divergence showing up here to be aware of as well. You can see the uncorrelation indicator spiked down. Here's the S&P to value line index. There's also kind of divergence going on here as well. You had a divergence back here. The S&P making new all-time highs. The value line did not here, formed a lower high. And then we got our typical correction into September. But it's still lagging here, notice. Another thing to monitor, don't talk about this often, the Nifty 50, that's the Indian index versus the S&P. These two tend to move lockstep together as well. And believe it or not, the Nifty 50 tends to lead. Well, so for example, you could see back here, Nifty 50 made a lower high, S&P made a higher high. Well, remember this leads. So that resulted in a correction on the S&P. Here, Nifty 50 lower high, S&P, and then you had a little correction there. Now what you have here is the Nifty 50 starting to, last couple weeks, selling off while our market's going up. So here's a daily view. So you can see in the very short term this divergence. Nifty 50 selling off, our market going up. So a little divergence there in the short term. Moving on to bonds, TLT, nice recovery last week. Last couple weeks up 2.5%. Remember, as this goes higher, long-term rates go down. The Fed has been saying they wanted to taper, but the bond market doesn't believe them, or at least right now. Here's a daily view of high yield corporate. You can see, they continue selling off. Here's TLT on the daily. Chart got out of order there. So the bullish view on TLT here, guys, is we simply had basically a complex ABC correction. And this could potentially rally up to a new high, which would take long-term rates down. Again, what the bond market's trying to say is it thinks the economy is slowing, and we're seeing that with some of the data, such as the revisions in the GDP. But, for now, the stock market doesn't give a crap. New all-time highs. That's what happens when you just print endless money. Energy index, again, that got a little overbought. Little divergence here. The BPTNR, bullish percent index, was at 100%. I don't have that chart here tonight, but, little pullback here. Oil services have had a pretty good pullback as well. All right, let's move to commodities, guys. So here's DBC. This is the commodity index. This is the monthly chart. So far for October, up about 5.8% for the month. Again, commodities overall have been declining since 2008, and especially since this 2011 peak, right? But we did break this trend line in early 2021. That sent up commodities this year, and that's why I've been bullish on commodities, all right? So longer term, they look good. You could also see how the ribbon had flipped early this year. It did flip back a little bit back here in 2018, ended up being a head fake, and we came back down. But this is a pretty good expansion. Longer term, this is your next resistance, but I don't think we're going to go straight up there. Maybe we get a pullback soon and then do something like that. Here's the weekly view of DBC. Again, quite the uptrend from the 2020 low. Clearly some sort of 5-wave type uptrend. Been very strong. Here's the daily chart. Back in September, we broke out of this range. A little pullback here the last couple weeks to the 20. These are the components of the DBC. Here's a ratio of the CRB to the S&P. So again, you can see how commodities were underperforming all the way back since 2011. This moving average ribbon's a pretty good guide on the ratio. Every time it pinched, was rejected. But we did see something different where the moving average ribbon started to flip. Again, hasn't resulted in a big move, a confirmed moving average expansion here, but it is slightly flipped. So we'll see if this can, this ratio can continue to curl up more. Let's see. Can this eventually do something like that? We'll see. But if it does, guys, you can see we're potentially very early in a commodity bull market. I mean, the ratio has hardly even budged if you look at this time frame. Moving on to some individual commodities. Here's crude oil on the monthly chart, up 11.4% for the month. It cleared this resistance. You can see we broke this, essentially 11-year downtrend line back here in early 2020. Next major resistance isn't really until you get up to here. Here's the weekly view. Again, we took out that resistance here as I showed. This is now support, guys. So if we get a pullback here in crude oil, this is now big support. Here's your daily chart. So couple pullbacks last week, but they held the 20. That's your short-term support. Natural gas has been a big runner this year, though got quite overbought up in here. You can see especially these candles, shooting star type candles. But this is potentially big support now, this $5 range. Here's the daily chart. A couple weeks ago, I identified this ABC correction. We bounced off the 50-day moving average. That was a good buy opportunity that I pointed out. But, hopefully you took some profits up here. It's coming down again. Now, if we come down and test the 50 again, I think it'll break it, guys. So I think the third time will be the charm and it'll be lost. Moving to copper. So copper was in this sort of downtrend coil type pattern. We busted out of here in early October. This is your resistance. Got overbought. You can see the doji candlesticks here. Also look at your ribbon. You can see how this is the guy when it gets too freaking wide. So we've had a good pullback here. Now, I'm going to watch to see if this broken trend line can act as support like that. Now, if price instead goes down into here, well, that'll be a negative breakdown. But for now, potential for it to bounce off of this support. DBA, agriculture, this is the weekly chart, obviously uptrending with commodities. That's your next long-term resistance. And I'm not going to show a daily chart tonight. Here's corn, monthly chart. I showed this late last year, 2020, this multi-year basing pattern, kind of a Stan Weinstein type pattern. We busted out of here. Big rally up. Corn has pulled back this year pretty good from the summer highs, but this is now big support, and you can see it's trying to find support there and reversing off of. URA, uranium. Uranium's had a hell of a move. I was bullish back here in late 2020 when it broke this multi-year up trend line. All these pullbacks were buy opportunities, especially this one here into August. I'm not really that interested in it right now until it has a consolidation. You can see last week down about 5.2%. Cotton, monthly chart, up 8.5% for the month. It broke out of this multi-year base last month, and it was a 7.5 year base. This is now big support. This looks bullish, guys. On a pullback, I think it'll form a higher low and then rally again. All right, that does it for commodities. Let's move on to cryptos. So here's Bitcoin. Bitcoin briefly made a new high here. So far, it's some sort of ABC type correction. Could form a coil, something like that. But, back here was a great buying opportunity. But we also pointed out this buy opportunity, guys, this simple ABC correction into this support zone. So now we're in a consolidation phase. Remember, guys, markets trend, consolidate, trend, and now it needs to consolidate. Here's Ethereum. Not sure why I don't have a trend line on this chart, but should be a trend line here. Broke through this resistance a couple weeks back. Here's the Ethereum ETF. Broke out last week. Mara, one of the crypto stocks, it's forming into a coil. Take note. Mara tends to be a nice mover. We liked it back here. We also liked it back here and here. BITB, another one of these digital currency stocks. Big pop on Friday. I didn't catch it. HUT was one we liked back here, coming out of this really nice basing pattern. Then we had a nice resistance here. It's been uptrending nicely. Really been a good trader. Bido recently was one of the ETS for the futures. Not going to show that because there's not much chart history. Moving on to the US dollar. Here's US dollar. Up 0.85% on Friday. Big up day. I was saying the last week, watch the uptrend line here. If that holds, the dollar could resume its uptrend. So horizontally rallied off here. Look at your moving average ribbon. It's a great guide. It went bullishly stacked back here in June. Every pullback, pinch has been a buying opportunity. And nice rally. So if it breaks here, next target would be up in here. Here's UUP, US dollar ETF, same type of pattern. Looks bullish, doesn't it? FXE Euro. Back earlier this year, I showed a head and shoulder pattern, and that has clearly been playing out. Gold, weekly view, up or down 0.7% for the week. So no changes, obviously, technically. It's been in this long consolidation since it peaked out here in mid-2020. Again, for the bulls, they need to break this weekly downtrend line. It's that simple, guys. This here is your major support around 1675, 1650. This is your major resistance. Here's the daily chart. So it's been flirting, trying to break this downtrend line, but quite honestly, very sloppy. This is your main resistance here. The stocks outperformed here. You can see on the GDX-GLD ratio, now short term, they're underperforming a bit. So now it'll be interesting, guys. If that dollar rallies pretty good, gold could have some weakness. You know, is it going to consolidate, form a higher low in here, or is it going to shit the bed again? We'll see. Here's silver. It's also been in a nice long consolidation since this peak out back here. Here's the daily. Broke on this downtrend channel a few weeks back. Now it's pulling back. We'll see if it can form a higher low. These moving averages, 20, 50 are your short-term support. GDX. This is your daily chart. So we've had a nice rally off of that low, which we pointed out as a long opportunity. GDX rallied all the way to the 200-day moving average. Stopped right there. Imagine that. So that was a good area to take some profits or take a short. I have some short via Dust ETF. Pulling back. Now I'm watching to see if it can form a higher low, possible inverse head and shoulder pattern. But I need a trigger. And quite honestly, you know, we only have one move down here, so it may need to do something like this if it's to form a higher low, some sort of zigzag. The bearish view would be it just keeps going down. So we'll see. Here's the 60-minute time frame. I added fibs. So far we've retraced a little in between the 38 to 50% fib areas. 61.8 fib will be another area I'll be monitoring. Should we get down to there? GDXJ. Here's, you know, a possible inverse head and shoulder pattern that could form if it can form a higher low. GDX, here's the weekly. If GDX doesn't form a higher low, this would be my target down here in the mid-20s. Basically, it would be a symmetry target based on this. As far as some individual names, BTG, again, a lot of these have a heck of moves down to here. They're now pulling back. So hopefully you guys took some profits on these suckers. Like HMY was one of my favorites out of this wedge pattern. Pulling back nicely. Again, I have some Dust ETF, and I took my profits on these early last week. All right, guys, let's move on to trade ideas. So Tesla has been unreal. This is a weekly chart of Tesla, up 22.5%. Okay, it's amazing to me. Tesla's up something like 22-fold since late 2019. That is just unfreaking believable. Anyway, just from a technical perspective, guys, just showing you this. You can see you had a nice coil here. Coils result in big moves. And then we had this long ABC correction. Mid part of last half a year. That's buying opportunity when you see ABC corrections in an uptrend. Also notice your moving average ribbon. You can see the same ABC. It resulted in a pinch. Okay, when it pinches are buying opportunities. So, you know, technically you could have bought this back in July, June, and held it. And finally, you know, it's really went on to its own the last several weeks. Just unbelievable. It's going parabolic. It's now, these are the times when it gets dangerous. Do not chase it now unless you're a pure day trader. Here's the daily chart. Again, very extended away from its 9 EMA here now. Look at these RSI and indicators, MACD, moving average ribbons. When you get moves like this, you won't see divergence typically in the, you know, standard indicators like people use, like MACDs and RSI. What I tend to look for is if I get a divergence in the CCI, and I don't really see it here. So very strong upturn, but we're very stretched away from the 9 EMA here. Let's look down at smaller time frames. Here's the 30-minute view. Last week I showed this ABC correction coil that resulted in another move. And finally, here's a 60-minute chart. Now, on the 60-minute, we do have a nice MACD divergence forming. Now, again, it's possible the MACD could curl up, cross, and form a lower high, but this is something I will be monitoring. It is getting super, super stretched, guys. But congrats if you've been in this sucker. I know quite a few people have been riding this thing. Congrats. It's just amazing how much Tesla has moved. Following up on other things, ENPH, a couple weeks ago, I pointed this out as a big weekly coil, and look at this move, up 31% last week out of that coil. Unbelievable. Netflix, one of the FANG stocks. This is the long idea back here. We also had it as a long idea in this flag. Broke out, continues higher. Had earnings. Here's one of my targets up here in the low 700s. So you've had this, year and a half long consolidation, basically 140 points. So, you add 140 points to here, 580 gives you a target of around 720, objectively. Microsoft, unbelievable strength as well. They have had earnings and just continue ever higher. Steve Ballmer wishes he was still CEO probably. When Ballmer was CEO, the early 2000s, stock basically went sideways. Heck of a run since he left. Google broke out of this coil last week. It had earnings. Looks strong still. Face Crook, well, they're not so strong. We all know the issues there. Bounced off the 200-day initially here. Stalled here at the moving average, lower high. Notice your moving average ribbon pinched. You can see how the moving average ribbons have been a great guide. But it undercut the 200-day. I talked about watching for a divergence on this last low. We did. We got a pretty good MACD divergence here, guys. If you think some of Facebook's problems are behind them, here's an easy long. You could be long, put a stop right here. This higher low. You do have a nice divergence here. Again, I'm not in love with Facebook, but there is a technical trade set up there with the stop. Here's Amazon. They didn't do too good in earnings last week with supply chain issues. Notice your ribbon here is pinched. You got to cut off a coil. Moving on to some other setups of ours. Costco. We showed this as a coil long pattern back in early October. Look at this super move. Now, I would be taking some profits. Look at some divergence here. It's had a hell of a move. Good 40 points out of this coil. It was made for a trade, not a long-term swing, so time to take profits. Nvidia was also a nice trade off this coil. Super move. By the way, guys, let me go back to that other chart. So whenever you have a coil like this, you buy this break, your initial stop could either be right here at this higher low or right here. Very, very tight. That's why we like these coils, guys. And then notice this solid candle here. So then your stop could be moved up to 50% of that candle after your first move to be a very tight stop. And then, of course, you could trail it up to the 9 EMA. But that's why we like these coils, because they tend to produce these big moves, and you can have tight stops relative to your entry, and you typically have good moves. We already discussed NVIDIA. Lowe's, heck of a move out of here. Same for Home Depot. AMD, very nice move out of this falling wedge type pattern. Was a perfect ABC. AMD is one of my long-term pet stocks. I've liked this for a few years now. GBT was a new long setup last week. Look at this nice move out of here. Gave you a great trade out of this bottoming pattern. Maxon was another trade from last week, a new one. Gave you a quick move to the 200-day moving average out of this resistance. MXCT was a new one from Thursday, coil pattern. Break that coil on Friday. Where could a stop be at this point? Shoot, if you want it really tight, maybe right there. Disney, I've been monitoring Disney for a short. It's starting to leak oil here a bit. I am short personally. Earnings, I think, is November 10th, so be aware of that. So still a little ways from earnings, but still hasn't busted this. We do have an open gap that could be a target if this breaks down. Stitch Fix, someone asked me about this. One of the guys I have a weekly call with, he monitors this. He manages a big fund. Their group likes it. There is a big support still here that it does continue to defend on the weekly. If you wanted to be long some with a very tight stop right there, you could. Here's the daily. You do have a nice MACD divergence setting up. Someone asked me about Chinese internet, KWEB. Here's the weekly chart. It doesn't look too good at the moment, guys. This is your long-term support down here. If this breaks down, it could be on the road down to there. Moving on to BABA. This is the long idea out of this wedge. So we'll see what the Chinese internet ETF does. I'm watching this to see if it can form a higher low, possible inverse head and shoulder. Here's a couple interesting things. JEPI, it's one of these covered call ETFs. So basically what they do is they buy positions in large stocks. They sell covered calls on them. And, they typically produce a pretty good dividend. This one around 7.5% dividend. Pays monthly, which is nice. And they typically have much lower volatility than the market because of their option strategy. This one actually looks bullish in the short term. Here's another one, Newsy, and this one's quite interesting. It's another one of these covered call ETFs. But in addition to selling covered calls, they also buy puts on those calls. So it's basically an option collar. So again, these typically have decent monthly dividends, maybe something to look for your dividend type strategy. What else we got? IBM, by the way, IBM goes ex-dividend on November 9th for $1.64. The chart looks pretty ugly, but it's already had a pretty good correction, guys. And notice it's been below the lower Bollinger Bands for quite a long time. I think it's set for a technical bounce sometime soon. But these are the next supports, so if it wants to probe lower, again, that's the dividend date if you want to capture that. And that'll do it. All right, guys, this newsletter video ended up being about 50 minutes. Take care, and we will see what happens this week post-Halloween. Have a good one.